But another thing which has actually happened right now is that not only Indian markets are gaining, but the Chinese market, which was the entire epicenter of the trigger, I must say, of what is happening across the world. Asset classes are actually melting because of virus breakout. If you look at the 3-month or the 6-month graph of Shanghai, either Shanghai or the CSI 300, which is Shanghai Shenzhen 300 index, it has come almost back to the levels. Pull up the line graph and you will see it has come back to the levels where the outbreak actually happened. That's the weekly Shanghai, almost 7%. So they have actually started regaining all lost ground, and rest of the world is still under the weather on what is happening. So that's the case as far as China is concerned. So we thought of getting your voice on how things are panning out globally because of what is happening. And we have Mr. Joseph Lupton of JP Morgan joining us. Joseph, thanks very much for your time joining us today on the show in this issue of slowdown triggered by China, global central banks coming in, assuring support, etc. Joseph, first let me understand from you, what are your thoughts on China? How weak can they go as far as growth is concerned? How will they make up for the lost ground as far as growth is concerned? How will they tackle what's happening in their country? Do you think this volatility is here to stay?
I do. I think to some extent you're already seeing a bottoming in activity and even some improvement. I think the hit to China has been severe, owing in part to the very significant efforts to contain the virus through various quarantines, and that has amplified the supply shock element of the downturn in China, and it's hitting very hard in February, and you can see that from the latest PMI survey reports, which collapsed for the February reading. But when we look at our daily economic indicators, things like coal consumption, air quality indexes, travel indexes, shipping indexes, all of these daily measures that we track, you can see a slow move up off the bottom. At the same time, you're seeing the virus itself that seems to have been contained and leveling out or even coming down in some cases. So those are all very kind of moving in the right direction. I think we have to be humble here and recognize there's a lot of uncertainty around this. But if we're right, you're going to see a first quarter in China that contracts very sharply. We're thinking 4% annualized quarter-on-quarter sequential growth. But then you're set up for, as things normalize, for a fairly large rebound, potentially as much as a double-digit gain in GDP growth in the second quarter. Again, quarter-on-quarter sequential annualized.
Joseph, the fear in the market is that, of course, that's the Shanghai graph for you. Look at the way it is smartly recovering in the last couple of days. So, Joseph, I was talking to you about supply disruptions, which this entire issue is likely to have brought about. Globally, businesses are getting affected because of supply disruptions. What are your thoughts, and how deep is the problem in your view?
I think you're already seeing that it is having some impact. Certainly, the nearest, the closest neighbors to China, in particular, those most integrated into the kind of the value-added chains, places like Korea, Taiwan, the ASEAN countries that are very linked into the value chain. These countries are feeling the shock quite significantly, and for the same reason we think it'll be a temporary event in China, I think it's going to be a temporary story in this region as well. The PMIs there also fell sharply, the purchasing managers' indexes. Similarly, I'd say commodity producers are kind of feeling the brunt of the effect. As you move further out from that, I think it's the disruptions have been more contained, largely through inventories. The longer this lasts, the more likely the inventories are. You get to a stock out type position, and you get these nonlinear type effects where it could do more damage.
Well, Joseph, the other big event is the way markets are cheering is the kind of support regulators as well as central bankers across the world have extended. Emergency rate cut. IMF has announced $50 billion of support. Many other central banks are joining in. Do you think this will be sufficient to stem the weakness, and do you see this regular support to come in the next couple of days as well?
So we're seeing a big swing towards easier policies. You've seen cuts already across Asia. China certainly has provided some policy supports. I think just as a general point on policy, it's important to recognize the first line of defense is just making sure liquidity is provided where it's needed. These are more targeted type programs, and you're seeing that across different countries. Banks, kind of central banks, making sure that liquidity provisioning is being provided. That starts in China, but it's elsewhere as well. You've seen various kind of LTRO type programs in different countries, including India, RBI announcing something like that, for instance. But then you move to rate cuts, and we have seen a whole spread of rate cuts take place across Asia. Then, of course, yesterday you had the intermeeting move by the Fed, cutting 50 basis points.
Joseph, last question on the Indian markets. The growth scare has set in here as well. Markets corrected, but now trying to find their feet. What are your thoughts on the way growth and the economy will pan out from here on?
So, as I said, the biggest hit, of course, is going to be in China, where we have a pretty steep contraction, followed by a pretty big rebound. In that kind of contour of a very weak to contraction is seen across parts of much of Asia with an equally impressive rebound. Outside that, the kind of pothole, if you will, of this kind of V-shaped pattern we're looking for moves a little bit into the second quarter, where you're thinking of the monthly profile rather than it being a February, March kind of bottom. It could be something more like a March, April bottom, maybe even May type bottom, in which case you see a bit more weakness in places like the U.S., where we have growth slowing down to near.
All right, Joseph, we'll let you go on that one. Thanks so much for joining us with your thoughts on the show.